We have with us Harshvardhan Dole, the Vice President at IIFL Securities, joining into the show right now. Harshvardhan, hi, morning. Glad that you could take time out and speak with us. Just wanted to understand how is it that you're analyzing what's going on within the power sector? Because on one hand, we at ET now are picking up from our sources that the Power Ministries actually asked the states and Discoms to take immediate steps to meet the unprecedented power demand. And at the same time, the Coal Secretary told us just yesterday that the country has adequate coal stocks at all their thermal plants, at this juncture. So just wanted to understand what is it that you're making of A, the power demand, which is clearly on an uptick, and B, whether we have enough reserves to actually meet that kind of surge.
Hi, good morning. So firstly, on the demand side, clearly the erratic weather trends are pushing the power demand to unprecedented levels. What we saw is a bit of erratic weather can lead to almost a double-digit power demand on a month-on-month basis. And that's quite unheard in the Indian context. Possibly that is also being supplemented by strong recovery from the manufacturing and the other segments of the economy. What we have seen is on the supply side, over the last few years, there has not been addition in the thermal capacity, which is key for meeting base load as well as super peak load in the Indian context. To make things worse, we have 25 gigawatt of stranded power plants. So per se, the supply is quite tight and demand is quite robust. So essentially, you are coming to a very, very peculiar situation whereby India may actually end up facing power shortages. And to that extent, I think the move initiated by the Power Ministry seems to be quite pragmatic, that in order to avoid blackouts, they are cautioning the state utilities as well as the private utilities to be prepared for imports during the peak and super peak hours. It may not be necessary if actually Coal India is able to produce the required quantity of coal, but it is always better to be on the cautious side instead of facing a blackout, and particularly during the election year. So seems to be a cautious move, but very much well needed.
But in the near term, Harshvardhan, the merchant tariff prices will go higher. Which are the companies which have the maximum advantage because of this?
Very well said. The ACBs are actually seeing big amount of drawl from both the exchanges, and the prices are very well reflected of that. Unfortunately, Nikunj, if you were to analyze the sector over the last 10 to 15 years, the way it has panned out, the strict pure pay merchant plays are no longer existing. I mean, the good old names that were probably listed with a big bag listing a decade ago do not even exist. And to that extent, one might actually struggle to find great alpha plays or great merchant power plays in the sector as of now. But having said that, there are a couple of companies whereby you may find some open capacities, or there might be opportunities to restructure the old PPAs, which as of now are not remunerative, thereby seeing a massive upgrade to the earnings. For example, Tata Power has 4,000 megawatt of PPA with various states, and we all know that for last few years they have been trying to tweak that. They may actually see this an opportunity, as well as the states might see an opportune time to bury the hatchet and restructure the PPA. If that were to happen, you might see a massive upgrade in Tata Power, and that might turn out to be the best merchant power play given what the sectoral landscape is.
Okay. Do you think in the near term there is further scope for companies which have a high weightage on merchant power to get re-rated? Because if the merchant power tariffs and what you've spoken about and what our understanding is that the demand mismatch would be there at least for next couple of months, then it really could be party time for companies which have high exposure to merchant power.
The demand supply mismatch may last for a couple of years, not a couple of months, in my opinion. And one should be prepared for paying higher power tariffs, particularly the guys who are in metros who are used to get 24/7 power. But that aside, I think people will try and work around ways to benefit from such acute demand supply mismatch. But instead of trying to find out those riskier plays, I will still focus on secular growth themes such as, maybe NTPC or an NHPC, or at times slightly riskier names like Tata Power. There will be plays like, maybe, Torrent Power, whereby there is an outside chance that the stranded gas power plants may be operational, thereby leading to earnings upgrades. But those are, strictly event driven, and one can't budget that into earnings as well as the PE multiples.
Okay. So, a simple question for our viewers. For those who are convinced that, look, power shortage is here, how do I maximize that in terms of making profits by buying stocks? Should one buy merchant power companies, which is utilities? I'm breaking it for our viewers. Should one look at power transmission companies because they also will have an advantage? Shouldn't one look at energy exchanges because there also the spread would increase higher? The entire cohort now will look attractive and interesting. What is the best way to maximize if somebody is looking at really converting this theme into a money-making idea?
Excellent question. I think there are multiple ways to play this whole power theme. Some people might want to play it in a less riskier route, which is by owning stable utilities like NTPC, Power Grid, CESC, Torrent Power, which get assured rate of return, and the earnings grow as the demand increases. But bear in mind, they don't have operating leverage. Some people want to play through commodities, maybe through Coal India or Tata Power, whereby as the demand for coal goes up, their pricing power goes up, their demand goes up, and the earnings can accelerate. Dividend yields are fairly attractive. Then there is a cluster of investors who want to play slightly alpha names, whereby they don't want to own stable utilities, they don't want to take a commodity exposure either, and probably they are looking at some of the food chain companies, which is buying into smart meters or buying into power cables or basically buying into the equipment manufacturers who will tend to cater to the capital, who will basically end up benefiting from the capex that these utilities would do. So there are multiple ways, and we at IIFL think that one should have a balanced approach. Bit of utilities, which is NTPC, Power Grid, and maybe Torrent Power, could be a good formidable combination, along with some of the food chain companies, which will emerge one of the biggest beneficiaries. And there are quite a few of them. Maybe Cummins could benefit. The order inflow could be very strong for companies like BHEL. Companies like REC, PFC will also end up benefiting because their loan book will keep on growing as the capex in the sector increases. So there are multiple ways. I think it's better to have a balanced portfolio when you're trying to play the power sector theme.
Harshvardhan, so glad that you could take time out and explain us and to our viewers what's really going on within the power sector and what's the best way that you as an investor can be making money here.